Hello, everyone. I am Nakamura, President and CEO of Rare Job Inc. I would now like to begin the financial results briefing for Rare Job Incorporated for the fiscal year ending March 2025. First, let me present a summary of our consolidated results. Here is a summary of the group's overall performance. Net sales were 9.715 billion yen. Compared to the previous fiscal year, this is a decrease of 4.5%. EBITDA was 749 million yen, down 34.6% year-on-year. Operating profit was 442 million yen, a decrease of 36.6% from the previous year. As for net income for the period, it was 268 million yen, which is an increase compared to the previous year. And regarding each business segment, in the reskilling business, our services for individuals have been struggling. On the other hand, our services for corporations have been performing steadily. Next, regarding the child and childcare support business, our alt dispatch service has been experiencing stable business growth. Additionally, we are expanding our sales areas. Furthermore, last year we entered into a capital and business alliance with the Gakken Group. We have also started providing services overseas. Next, I will talk about the Rare Job Group services. When broken down by segment, there are two segments: the reskilling business and the child and childcare support business. As for the reskilling business, we offer online services that help adults acquire knowledge and skills for reskilling, such as Rare Job Ikaiwa, Progos, and services for corporations. In addition, Shikaku Square is also included as part of this business. Next, regarding the child and child-rearing support business, this segment provides services for children from preschoolers to high school students. The largest part of this is the alt dispatch service business. In addition, there are also services such as Ripple Kids Park, an online English conversation service specialized for children, as well as offline classrooms. These are all included in this segment. Yes, and then moving on. So, these are our service offerings. Our range of services covers a wide spectrum, from corporate clients to individuals, from children to adults, and also for schools. Within this lineup, we focus our investments on certain areas, and for those that aren't working out well, we make decisions to withdraw from them. In this way, we make careful judgments as we provide each of our services. Next, let me move on. This is the financial summary for the fiscal year ending March 2025. Our net sales amounted to 9.715 billion yen, which is a decrease of 4.5% compared to the previous year. EBITDA was 749 million yen, down 34.6%. As for operating profit, it was 442 million yen, a decrease of 36.6%. As for ordinary profit, it was 424 million yen, a decrease of 39.5%. Regarding net profit for the period, it was 268 million yen. Compared to the previous period, which was in the red, we have now returned to profitability. As for the EBITDA margin, it was 7.7%, down by 3.6 points. The operating profit margin was 4.6%, a decrease of 2.3 points. And regarding ROE, it was 14.4%, an increase of 28.0 points. Regarding our net sales performance, we ultimately ended up significantly above the initial earnings forecast. Additionally, concerning our operating profit and the financial metrics below that, we had previously revised our forecast in February of 2025, but we successfully ended up exceeding this revised forecast as well, demonstrating strong financial results. And to speak about the overall picture, since our founding, we have achieved increased revenue for 16 consecutive terms. However, in the fiscal year ending March 2025, which is our 18th term, for the first time since our founding, we ended up with a decrease in revenue. I feel that this is a disappointing result. However, even so, here we will make sure to address this properly. Within this situation, we are clearly distinguishing between areas where we should invest and areas where things have not gone well and should be withdrawn from. By partially withdrawing from certain areas, our sales may decrease, but at the same time, we are solidifying our profits. With this foundation, we are moving forward with investments so that we can achieve increased sales and profits in the current term, the next term, and beyond. That is the approach we are currently taking. Next, I will discuss the segment-specific profits and losses. In the reskilling business, our services for individuals are struggling. On the other hand, our services for corporations are performing steadily. In the child support business, we are generating stable sales and operating profits, mainly through our alt dispatch service. Specifically, sales for individual services amounted to 2.827 billion yen. Compared to the previous fiscal year, this represents a decrease of 15.2%. In terms of consumer services, we had three main businesses: online English conversation, the high-priced Smart Method product, and the Shikaku Square business. However, among these, we decided to withdraw from the Smart Method business during the last fiscal year. As for the consumer segment, we first decided to withdraw, and as a result, we have not been acquiring new members since this week. Because of this, sales in that area have decreased compared to the previous fiscal year, and this is one of the factors contributing to the decline. And regarding our corporate services, we ended up with 1.839 billion yen in sales, which is a 1.3% increase. And as for the child and childcare support business, regarding the LD dispatch service, we achieved 469.3 million yen, which is a 2.1% increase. On the other hand, for services aimed at children, mainly Ripple Kids Park, as for that, we ended up at 354 million yen, which is a negative 17%. Well, regarding this as well, we sincerely hope that things proceed very well. In various important areas, especially by thoroughly reforming the instructor side of our operations, we are diligently working to firmly generate substantial profits and significantly improve the overall profit margin, particularly by effectively addressing the entire cost side. While meticulously carrying out these initial and crucial steps, we are steadily and consistently implementing these comprehensive reforms. And then, regarding the overall and comprehensive cost control, by thoroughly and diligently managing it, we have ultimately ended up with a significant operating profit of 442 million yen. Next, this is the breakdown of quarterly sales trends. Looking ahead to the next fiscal year, or rather this current fiscal year, we will further accelerate our focus and selection, including investments in growth areas. By doing so, we aim to expand the scale of the entire group. So, for now, the group as a whole is taking a bit of a step back, and that's the result we've ended up with, but we're managing things well. As for the areas that didn't go well last fiscal year, we withdrew from several businesses overall. We have thoroughly analyzed the factors behind what didn't work, and while carrying forward the positive aspects into this fiscal year, we will add those good elements and services to the new services we are developing this year. That's how we plan to move forward this fiscal year as well. Next, here is the breakdown of expenses by quarter. So, especially in this current fourth quarter, well, actually, last quarter, the fourth quarter, since our profits were progressing smoothly, we decided to invest in advertising and promotional expenses, allocating more to that area within the fourth quarter. As a result, advertising and promotional expenses were somewhat higher in the fourth quarter. With that in mind, we are continuing to invest in order to build up solid sales this term and to strengthen our organizational structure. As for other areas and aspects as well, we have been steadily and consistently moving forward while keeping everything under meticulous control overall. Over the entire course of the year, last year in particular, we focused firmly and intently on initiatives designed to significantly raise brand awareness. So overall, our advertising and promotional expenses have noticeably increased. Next, let me talk about the breakdown of expenses. This will be the breakdown of expenses for each segment. Regarding the res-killing business, advertising and promotional expenses are included. In this area, we are making a certain increase in spending to firmly enhance brand awareness. In particular, we are focusing on placing ads on the web, such as on social media, to effectively raise awareness. As for the other areas, we are managing them carefully. We are keeping things under control, such as the cost of instructor fees and similar expenses. These costs are being managed in line with sales, so we are keeping them under control as well. Next, I'll break down the expenses for the child and child-rearing support business. Here, we are generally managing costs well, so overall expenses have decreased. In particular, the area where costs have gone down is with the online English conversation instructors. Specifically, for the children's online English conversation instructors at Ripple Kids Park, to be exact, we've managed to reduce overall costs by reviewing and optimizing the instructor compensation and the supply system. That's the kind of thing we've been able to achieve, so we feel that we're successfully controlling costs. Next, this is the BS summary for last quarter. Mainly due to software and goodwill amortization, our fixed assets have decreased. Also, with the repayment of interest-bearing debt, our liabilities have gone down. As a result, our equity ratio has improved recently, and it now stands at 32.8%, which is an improvement of 3.8 percentage points. Next, let's move on to the cash flow summary. As for operating cash flow, we had an inflow of 226 million yen. Investment cash flow, due to the acquisition of intangible fixed assets and so on, resulted in an outflow of 78 million yen. And regarding financing cash flow, because we repaid interest-bearing debt, there was an outflow of 465 million yen. As a result, the balance of cash and cash equivalents at the end of the period settled at 252 million yen. Next, I will discuss the trends in our financial indicators. Regarding ROE, for the fiscal year ending March 2025, it stands at 14.4%. For this fiscal year, based on our earnings forecast calculations, we estimate it to be around 15%. As for the cost of shareholders' equity, when we calculate it, it comes out to about 8%. That's precisely how we comprehensively see it. With a shareholder equity cost of approximately 8% and an ROE of about 15%, we are firmly and confidently presenting these financial figures. When we meticulously calculate this fiscal year's projected PER, taking into careful consideration the shareholder equity cost, we fully expect it to significantly increase compared to the current level. Based on that comprehensive analysis, we have also diligently estimated the PBR and other relevant financial indicators accordingly. So regarding this, since last autumn, our CFO, who joined us then, has been taking the lead in thoroughly calculating these financial indicators within our company. We are also presenting these figures in materials like this, and going forward, we plan to regularly monitor them to ensure they are properly reflected in our stock price. That's what we intend to do. Next, I'd like to move on to our earnings forecast for the fiscal year ending March 2026. So, for the fiscal year ending March 2026, which is this current term, here is a summary of our earnings forecast. In order to steadily expand our sales, we are taking a mid to long-term perspective, appropriately controlling costs, but at the same time, making sure to invest properly where investment is necessary. While doing this to drive growth, we also aim to secure profits, and we are expecting both increased sales and increased profits. Our sales target is 9.8 billion yen, which is a 0.9% increase. As for EBITDA, we are projecting 750 million yen, which is a 0.1% increase. Operating profit is expected to be 450 million yen, up by 1.8%. Ordinary profit is projected to be 440 million yen, which is a 3.7% increase. As for net income for the period, we are projecting 310 million yen, which is a 15.3% increase. Yes, and regarding the EBITDA margin, we are planning for 7.7%, the operating profit margin at 4.6%, and ROE at 15%. Now, moving on, these are the forecasts for each segment. For individual services, we are projecting 2.7 billion yen, which is a 4.5% decrease. The main reason for this is the discontinuation and withdrawal of the high-priced product called Smart Method. As a result, the sales from that product will be completely gone, so the impact of that is relatively significant in this segment. And as for our comprehensive corporate services, we will continue to diligently sell our online English conversation programs and other related educational services, while also making absolutely sure to properly and effectively support all of our valued clients. By providing comprehensive solutions to issues such as global leader development, we aim to steadily increase sales, targeting a 10.9% increase to 2.04 billion yen. As a result, we are aiming for a segment profit of 425 million yen. Regarding the child and childcare support business, we are planning 4.72 billion yen for the alt dispatch service. As for English conversation services for children, well, there is a slight... Although the trend isn't great, we plan to put a firm stop to the decline and are expecting sales of 340 million yen. And as for the real segment profit, we are aiming for at least 230 million yen. We want to firmly achieve sales of 9.8 billion yen and an operating profit of 450 million yen. Furthermore, regarding our consolidated business performance trends, we aim for stable growth in both sales and operating profit while maintaining profitability. We are determined to manage the company properly so that, starting this fiscal year, we can once again achieve both increased sales and increased profits. Next, I would like to talk about our strategies for this fiscal year and beyond. First of all, the vision of the Rare Job Group is chance for everyone. We want to provide various opportunities to people all over the world, to all kinds of people. To achieve this, we want people to seize those opportunities. For that to happen, they need to hone their skills. From childhood, we want them to learn various things, and even as adults, to keep learning and acquiring new skills. As a result, we hope they will have access to all sorts of opportunities. We want people to gain these opportunities and then go on to thrive in society. This is something we hope to promote broadly. We want people to flourish in various places, to unlock and develop their abilities, and to truly shine and succeed. That's what we hope to achieve. Within this, especially in the area of global business, we are looking to utilize foreign talent and provide solutions in that field. That's what we aim to do. Or, for example, we also provide solutions to educational institutions, such as schools. And naturally, in creating these kinds of solutions, we make use of AI and other technologies to deliver our services. This is the kind of work we are engaged in. And looking toward the future, we want to take on a variety of new challenges. Recently, AI has been advancing rapidly. Within our company as well, we are, of course, utilizing AI in various areas as a matter of course. And as for this AI, when it comes to using AI behind the scenes or in our business operations, we naturally plan to implement it in various areas. At the same time, we've also received feedback from many investors and users, suggesting that education itself will continue to change dramatically because of AI. Some even wonder if English conversation teachers will become unnecessary, or if everything could just be handled by AI English conversation instead. We often hear these kinds of comments and questions. There are actually quite a lot of them. However, what we believe is this. It's not just about AI. Of course, AI is important when it comes to helping people learn and develop their skills through our services. AI and people. We believe that combining humans and AI is extremely important. We talk to all sorts of people about this. There are many companies, both overseas and in Japan, that offer AI English conversation services. Even when we ask those people about it, when it comes to AI English conversation, there are actually people who use it and pay for it, but how many of them are actually continuing to use it? When you ask about that, you'll be surprised at how few people actually stick with it. I mean, just having conversations with AI, sure, if you really keep at it every single day, your English skills will definitely improve. There's no doubt about that. However, the real question is whether you can keep up with English conversation, and whether you can keep it up with an AI as your partner. Well, that's actually really tough. Well, in cases where things are going well, it's often because they've made it feel like a game, adding gamification elements so it's fun. That's how they make it so people can keep going. Or, by designing the UI really well, they make it so people want to keep using it. Basically, unless you put a lot of effort into that part, people just won't stick with it. That's something we really see as a challenge. AI is incredibly useful, but when it comes to using AI in education, it's not enough to just have the tools or services available. You need to make sure people actually use them, and that using the service leads to real learning outcomes. All of this needs to come together as a complete package. We believe it's our responsibility to provide that properly. And for that, of course, using AI is important, but it's also crucial to ensure that people keep using it and actually see results. We believe that a system to keep people engaged and continuing to use the service is necessary. And when it comes to making that happen, at this point in time, we think that AI alone is still not enough. People are essential. So it's very important to leverage this human strength. We believe this is extremely important. That's why. Skillfully combining AI and people, by doing this, we can truly achieve results. This is what we want to build as a service. By doing so, we can create something unique that can't be accomplished by an AI English conversation service alone, nor by a service that relies solely on people. It's necessary to properly combine both. That's why having the strengths of both is so important. We believe that by doing this, we can truly grow this market. That's why we are committed to combining both AI and people. We want to firmly provide that as value, and we intend to take on various initiatives to achieve this. Of course, while making use of AI in various areas, we will also continue to refine the human aspect and then combine the two. We want to skillfully combine both online and offline approaches as we move forward. So, how exactly are we going to do this? We are thinking of creating synergies in various areas, combining different elements, and developing each of our consumer, corporate, and school businesses accordingly. And also, for us, it's not just about using AI. Going forward, as part of our strategy to ensure solid growth, we want to accelerate our business development not only by ourselves, but also by building strong synergies and collaborations with various partner companies, thereby establishing a competitive advantage. Specifically, for example, we currently hold a 20% stake, And last year, we entered into a capital and business alliance with Gacken Holdings. Together, we are working on creating various things, and while doing so, we are also forming partnerships with a variety of other companies. By leveraging and utilizing the strengths of each partner, we aim to expand our reach, and we are looking to accelerate these efforts moving forward. Well, these are the kinds of things we have been doing both this term and continuing from before. There are various initiatives. As for AI-powered products, we use AI in lesson reports, have released an AI beta version, use AI for grading exams, for administrative Scrivener corrections, and so on. We're applying AI in all these areas and more. We've also formed partnerships with Gakugi Holdings, among others, with the Expo and similar organizations as well. We've also conducted research and done a variety of other things. For example, we've partnered with the government of Pakistan and engaged in various collaborations like that, all while leveraging AI to drive business growth. We plan to further accelerate these kinds of initiatives in the current fiscal year as well. Now then, I'd like to go through each one, starting with the consumer business and then the corporate business. Regarding the consumer side of the online English conversation business, well, as for the pricing, the most popular plan is the 25 minutes per day plan, which costs about 8,000 yen. This is, in fact, the most common price range. In addition to this main price range, we also have lower priced options, such as plans for 8 sessions a month and other more affordable plans. Along with these, there are even cheaper app-based options, like the Lite plan and other easy-to-use, accessible options. So we're covering those segments as well, along with the standard online English conversation plans. Then, on the higher end, we also offer plans in the 20,000 to 30,000 yen per month range. We're developing services for each of these segments, and then we're planning to encourage users to move between these different services. And with that in mind, we're working on developing each service this fiscal year. By getting users to circulate among these services, we aim to increase the LTV, lifetime value, per customer. Additionally, we want to attract new customer segments and have some of them transition between our offerings. Through these efforts, we're determined to steadily grow our sales. And regarding our corporate business, we want to further advance our solution-based sales approach that addresses challenges in human resource development. A few years ago, our corporate sales mainly focused on selling online English conversation services. We have evolved into solution-based sales, where we address HR challenges, mainly focusing on developing global leaders by drawing out our clients' needs and providing a variety of solutions to solve those issues. We will continue to further advance this approach. From marketing to inside sales, then field sales, and finally customer success. This is the process. We are also working to further enhance customer success. We will continue to strengthen this, making sure to properly support our customers. While providing services efficiently and effectively, we aim to ensure service continuity and further improve customer satisfaction, connecting these efforts together. This fiscal year, we are working to evolve these initiatives even further. As we are seeing an increase in complex and large-scale projects, we are also focusing on enhancing our ability to respond to such cases. And next, we have the Progos test, which we are actively promoting and selling. It has been extremely well received and is being adopted by a wide range of companies. So, regarding Progos, we have started offering it with monitoring. We're also beginning new initiatives, such as collaborating with other companies as an OEM or original equipment manufacturer, which allows them to incorporate our Progos testing system into their own services. Specifically, there's a provider called English Central, which offers online English learning services, and we are now providing the Progos test to them. These efforts help us make Progos more accessible and support more learners in their language development. We have integrated it into their website as an OEM offering. And their clients, especially in places like Turkey, Thailand, and Brazil, well, they have customers in those regions, and we're having users there take the Progos test. This is exactly the kind of initiative that we're currently working on. By doing this, we're aiming to further improve the overall profitability of the Progos test. This fiscal year marks the 5th anniversary since its initial release, and during this year, we're aiming for a total of 1 million test takings, which is a significant milestone for us. We're carefully planning to achieve that goal, and reaching this important milestone will be the starting point for further improving profitability and expanding usage, not just in Japan, but all over the world and across various services. That's exactly what we're aiming for. We want to enhance the profitability of this product on its own, and then by also providing additional training services beyond that, we plan to further increase our overall profitability. Next, let's talk about our child and childcare support business. In this area, we're focusing on strengthening our sales efforts to schools. Within the Gakken Group, there's a company called Kiribana Bookstore, which offers a variety of textbooks and English learning materials. By leveraging those materials, especially since they have a strong presence in the high school market, we're developing products specifically for high schools and providing them accordingly. We're considering strengthening our efforts to dispatch all to high schools. Since we already have a strong presence in elementary and junior high schools, we want to build on that foundation and expand our initiatives there. Providing these services as well, we plan to work together with Kirihara Shoten, building our efforts on a foundation of collaboration. By doing so, we aim to further increase our sales. And regarding our certification services at our company Shikaku Square, we offer services for administrative scrivener exams, preliminary bar exams, patent attorney exams, and so on. Within the Gakken Group, there is also a service called Shikaku Pass, among others. The qualifications offered here are relatively light certifications, such as financial planner and similar credentials. There are services that provide these kinds of qualifications, and by working closely in partnership with them, for example, recently we've been collaborating on comprehensive customer referrals, we aim to further strengthen our partnership with Gakken, making full use of these connections to expand our services. That's the direction we're planning to take. Even now, we're already working on various initiatives. Everyone is working together on various initiatives, such as joint app projects, and a lot of things are currently in progress. As for our overseas business, we are currently offering services through an app called Raylingo. For now, we are focusing our marketing efforts mainly in Taiwan, but in the future, we plan to launch full-scale marketing campaigns in other, larger markets as well. Right now, what we're doing is actively partnering with a very well-known and widely used app service in Taiwan called VoiceTube. We've officially formed a partnership with them, and by working closely together and integrating our respective services, we're aiming to expand our reach even further than before. So, we're carrying out various important initiatives like this as we move forward, step by step, to achieve our goals. We're working to expand broadly, from individual consumers to businesses and even schools. Our goal is to achieve our vision of chance for everyone, everywhere. And finally, I'd like to talk about shareholder returns. Regarding dividends for the fiscal year ending March 2026, taking our earnings forecast into account, we expect the dividend to be 8 yen. Previously, the dividend was 5 yen, so we are planning to increase it to 8 yen. We are committed to ensuring stable dividend payments going forward. In addition, we are also providing shareholder benefits to all our shareholders. For example, our services such as Rare Job English Conversation, Borderlink, Ripple Kids Park, and Shikaku Square. These are some of the services we offer. At a discounted price, we can offer them as shareholder benefit tickets. So yes, we are indeed providing these benefit tickets. And that concludes the financial results briefing for Rare Gym Company, Limited for the fiscal year ending March 2025. From this point forward, we would now like to smoothly move on to the Q&A session. If you have any questions or concerns, please feel free to use the Q&A feature to send your questions in text form. We look forward to your participation. Please note that, due to time constraints, we may not be able to answer all of the questions that are submitted to us. Also, the questions we answer in the Q&A session may be included in the on-demand video content that will be made available and distributed at a later date. So please be aware of that in advance. With that in mind, if you have any questions, please submit them in the Q&A section. We would appreciate it if you could write them there. We'd just like to wait a little while. Okay, so we have our first question, so I'd like to read it out. The question is, what are your assumed exchange rates, and how do you view the impact of currency fluctuations? Thank you for your question. Well, our business is quite affected by exchange rates. In particular, we are influenced by the Philippine peso. We also use the US dollar, but mainly we are affected by the Philippine peso. And as you know, recently the yen has been weakening. Well, as for us, we basically hedge against currency fluctuations. Because of that, for this fiscal year, a certain portion of our foreign exchange exposure is already fixed, meaning it's locked in at a set rate. So that part has already been factored into our budget. On the other hand, there are also portions that are affected by the market exchange rate. And regarding those portions that are impacted, the exchange rates that we have assumed in our budget calculations are 150 yen to the dollar, and for the peso, we are assuming a rate of 2.6 yen per peso. These are the specific rates that we have based our annual financial projections on. As of today, the prevailing rate for the dollar is approximately around 146 yen. And for the peso as well, it's about it's currently around 2.62 yen per peso. So the rates are generally moving within the range of our assumed exchange rates. That concludes my explanation. If anyone has any other questions, please feel free to write them in the Q&A section here. Well, all right, let's move on to the next question. Yes, so what are your thoughts on the stock price that your company is expecting? We received a question like that. Thank you very much. For this one, I'd like our CFO, Maki, to answer regarding our company's approach to the stock price and related matters.
Is that all right? Thank you very much for attending our financial results briefing today. My name is Taisuke Maki, and I serve as the CFO of Rarejob Group. Without further ado, I will begin answering your questions. First of all, the current economic environment is highly uncertain and unpredictable due to issues such as US tariffs and the rising prices caused by the ongoing depreciation of the yen. In our business as well, we have also been significantly affected by various factors, such as increased communication costs due to the weaker yen, as well as a decrease in the number of service users as a result of fewer overseas travelers. However, as of this fiscal year end, we have seen a notable improvement in ROE, and we fully expect to see further positive improvement in ROE in the next fiscal year as well. Additionally, we have set our dividend forecast to reflect an anticipated and expected increase in dividends. Taking all of these points into careful consideration, we believe there is still significant potential for the stock price to increase in value overall moving forward. As for our specific stock price forecast, we recognize our cost of capital, which we have disclosed as being 8%. Taking growth potential into account, we expect the PER price-earnings ratio to generally remain in the mid-14s. Regarding the stock price, based on this price-earnings ratio PER of around 14, which is a commonly used indicator to assess whether a stock is fairly valued, we anticipate that the stock price could recover possibly over the coming period to the mid to upper 400 yen range. Also, when actually trading stocks, please make sure to review the cautionary information on page 44 of the supplemental financial results materials before making any decisions. That concludes my presentation.
That concludes my answer. If anyone else has any questions, please use the Q&A section. We'd appreciate it if you could submit them there. We'll wait a little longer, but if there are no more questions in the next 10 seconds or so, we'll wrap things up. Does anyone have any questions? Is that all right? We have one question. Yes, thank you very much. Thank you for your question. Regarding the effects of the capital and business alliance with Gakken, how much have the benefits increased recently? Also, Are there any plans to further develop this relationship in the future? Thank you. Well, regarding the effects of the capital and business alliance with Gakken, even in this fiscal year as actual sales thanks to this alliance, well, some of those effects are already being realized to a certain extent. Also, there are benefits from things we create together and from things that come in the form of comprehensive customer referrals from their side. We are conservatively estimating that there will be at least this much impact from these areas. So, by further developing this relationship, we believe there is a strong possibility that sales and profits in that area will increase even further. Break time equals 0.5s// in each area. For example, in the consumer business, we are discussing things like comprehensive customer referrals with the other party, or working together to create something entirely new. These kinds of discussions are steadily progressing. As for the corporate business, we are also talking about their valuable clients on the other side. We are also working together with their business partners to have them sell our products to their clients. This is one form of collaboration. As for the school sector, they already have several connections, such as Tokyo Global Gateway and Kirihara Shoten, among others. Since they have these relationships, we are looking to collaborate effectively with them and leverage each of these connections. For example, we are working on initiatives such as referring customers to their warehouses, among other various efforts. Regarding the certification business as well, we have already started activities like customer referrals. So, while last season the actual sales impact was still quite small, we expect that this season, sales from these collaborations will start to show more results. Through this, we hope to further. We believe that this relationship will likely lead to even greater sales this season, next season, and beyond. Also, as we continue to strengthen our partnership, we aim to create an even better form of collaboration. In order to create even better products together, we intend to work closely with Gakken Holdings, moving forward with various initiatives. Our goal is to make an impact on both companies' sales and profits. That's what we are aiming for. As things stand now, we are already working together on a variety of projects. That concludes my explanation. If anyone else has any questions, please feel free to submit them through the Q&A. We would be happy to answer them. Is that all right? Well then, if there are no further questions, I would like to conclude this financial results briefing. Thank you very much to everyone for taking time out of your busy schedules to attend today. We appreciate your continued support for Rare Job. Thank you very much.